Good evening, class, and welcome to our advanced taxation class. My name is Chima, and today we are taking a topic called special businesses. So, you may be wondering, what is special business? What is the purpose of a special business? We'll be talking about mainly shipping or air transport or courier companies. We'll be talking, we will not be talking much about taxation of insurance companies, neither will we talk much about banks and others. Our conversation will center on shipping and air transport companies. So this is what we are going to be looking at today. So at the end of today, we are going to learn the procedure for assessing businesses in the shipping or air transport or courier services. We will talk briefly about the procedure for assessing Nigerian life assurance business and also for assessing non-life assurance business and for non-life Nigerian businesses. This is for insurance. And we'll be talking on the provisions of the Finance Act 2019 as it relates to real estate and investment companies. All right, so the Company Income Tax Act, also known as CITA, contains special provisions with regards to companies engaged in shipping. So this is shipping or air transport business, as well as those in the wireless telecommunication and insurance business. So these are the companies that are special businesses. So that's why they say they have special provision. What are those special provisions? Now the provisions below are additional to the normal rules of allowable and disallowable expenditure in tax practice. So we're going to see some of these things here. Now they said Finance Act 2019 and 2020 introduced some amendments to CITA with respect to taxation of insurance business, estate companies, and real estate investment companies. These are special businesses. Now let's look at the shipping or air transport or courier business. Now, what are the provisions for these ones here? They said non-Nigerian companies. So take note of this, non-Nigerian companies. In CITA section 14, there's a provision regarding companies that are non-Nigeria that are into shipping or airline business. Now, example of these would be British Airways, which other airways do we know? Etihad Airways, and all those other ones you know. Of course, Nigerian Airways is not there. So you know that they have to be non-Nigeria and they have to be either in the air business or in the shipping or cargo business. That's what we should know. The substance of that section is as follows. The profits or losses of such company deemed to be derived from Nigeria is the full profit or losses arising from the carriage of passengers, mails, stock, livestock, or goods shipped or loaded. Now the point here is loaded into an aircraft in Nigeria. So it means that if an aircraft is loaded in Nigeria and it takes off, the fact that it is loaded from Nigeria does not mean it's a Nigerian company. So let's say, for example, British Airways is in the international airport here in Lagos, Nigeria, and they carry passengers from Lagos down to the United Kingdom. Now, because these people were loaded in an aircraft in Lagos or in Nigeria, the profit that is arriving from that transaction is deemed to be derived from Nigeria. So it means the income you derive from there is Nigerian income. Let me give you an example that makes it local here. Let's say, let me use bus transportation. Let's say you are coming from Ikorodu in Lagos and you load passengers and your passengers are filled up in your bus or in the bus and you are going from Ikorodu down to TBS in the island. Now, because you loaded passengers from Ikorodu, the revenue is made in Ikorodu, and so it means that those people who are collecting revenue tax, all these small tax from buses that are loading, they will come and collect taxes from these people because it is being loaded at Ikorodu. Now, along the way, they drop off people at K2. They didn't pick any passenger. No person will come and take tax from them. They drop at Oshodi. They now drop at Lekki or TBS. And all the passengers came out from TBS at the island, the Balende side. Now, you agree with me that the income is not made at TBS. And so the tax will not be collected from TBS, right? It is made from Ikorodu. So what am I saying? In this instance, origin of travel, the origin is important. So origin makes us to know where the income comes. So in this instance here, if the passengers are loaded in an aircraft in Nigeria, even though they are traveling outside Nigeria, because they were loaded in an aircraft in Nigeria, it means that the income, the profit, or the loss is deemed to be derived from Nigeria. This does not apply to passengers' mail. This does not apply to passengers' mail, livestock, or goods which are brought into Nigeria solely for transshipment or transfer from one aircraft to another in either direction between aircraft and ship. Now let's look at the example I gave before. So you are moving from Ikorodu. When you got to K2, there is something that happened to your vehicle or to the vehicle, and all the passengers had to come down. Okay? Then another vehicle coming from K2 now came, They now transloaded them. They didn't pay any more money. They now transloaded them. You agree with me that the income is not made in K2. There's only a transshipment. So it doesn't apply. The same thing too, let's take that same idea. You are going from Nigeria, let's say you are going to UK, and something happened along the way. Maybe you stop at Mauritius and there is a transloading or transshipment. I'm just assuming that's their route, and you now go to your final destination. It doesn't apply. Let's say now somebody is going from UK to US and there is a brief stopover in Nigeria. So the fact that they now did the transloading in Nigeria doesn't make it a Nigerian income. That's the point we are making here. So the sums receivable in respect of passengers and so on carried in Nigeria as referred to as above, there shall be applied the following: the ratio of profit or losses of an account period before depreciation to the total sums in respect of the business of the company, and the ratio of depreciation to the total sum receivable as certified by the tax authority of any country where the non-Nigerian company is registered, to the satisfaction of the revenue service. This ratio shall be applied on the Nigerian income to arrive at the capital allowance for the relevant year. So what are they telling you here? They are telling us here that there are two kinds of ratio. They call it adjusted profit ratio. Adjusted profit ratio. This is what we are going to look for. Then this is also called depreciation ratio. So these two ratios are to be certified by the Nigerian tax authority. Now, note that this situation will apply where the revenue is satisfied that the tax authority of any other country computes and assesses on a basis not materially different from that prescribed by the SITA of Nigeria. Now, where the ratios referred to above cannot for any reason be satisfactorily applied, the profit deemed to be from Nigeria may be computed on a fair percentage on the sum receivable in respect of the carriage of passengers, ship, and all that. You've learned about this kind of thing, fair percentage, in our last class. Now, if the company fails to agree with the revenue service shall give notice to the company of refusal to admit the claim and provision of SITA with respect to objections, and appeal shall apply accordingly with necessary modifications. So what are they saying here? That the company may not agree with the fair percentage and may want to, object and go to the TET. Now they said, however, where there is an agreement on the two ratios and the Nigerian tax authority is convinced that the Nigerian companies enjoy similar treatment in the company of the foreign company, the understated procedure shall be adopted to subject the company to tax. Okay, so this is the procedure. First, we need to find the global income. Find the global income. How do we get the global income? We will aggregate all the income of the company for the relevant years. Now let's look at an example here. Let's say British Airways. British Airways is having income in Nigeria, in UK, in Dubai, in US, everything. They are going to prepare and aggregate all the income. So how will they know? Because they will look at their financial statement. The financial statement will be prepared by the parent company in UK, but it will be available for Nigerian government to see. So all the income, including that of Nigeria, so it means that they will be bringing them country by country, the income from each country, and they will aggregate them. That becomes the total income for that relevant year. Now, they will have to determine the Nigerian income. So it means they are going to look for the Nigerian income on goods and mail and passengers shipped or carried out of Nigeria. That means they have been loaded in Nigeria and they have been carried out of Nigeria. Then after that, they are going to calculate the global adjusted profit. That is the ratio. So, okay, this is the global adjusted profit. What is global adjusted profit? That is the profit that that is the adjusted profit when all the uh, disallowable expenses have been added back and all the allowable expenses have been deducted. So they will have to get their global adjusted profit. Then after they've gotten their global adjusted profit, the next thing is to compute the global adjusted profit ratio. So yeah, that is that APR. So here, this is APR. I can call it GAPR or we can call it GAPR. Then after that, you compute the global depreciation ratio. This is DR or GDR. When you've done that, when you have computed the global adjusted profit, you now compute the Nigerian adjusted profit. How will you do that? You will look at the global adjusted, so this is Nigerian adjusted profit. Now, you take a nap. So you do that by looking at your global adjusted ratio and multiplied by the Nigerian income. When you do that, you now calculate the Nigerian depreciation, Nigerian depreciation. We call it ND. Nigerian depreciation, you use a depreciation ratio and multiply by your Nigerian income. Then you have your total profits for tax. You now find your total profit by saying Nigerian adjusted profit less Nigerian capital allowance. So sorry, this is NC, Nigerian capital allowance, instead of depreciation. So you will now remove the depreciation from the Nigerian capital allowance. You now find your total profit. Then you will determine the tax payable by applying the rate in total profit. So the rate is going to be 30%. So the rate here, rate is 30%. So this is a foreign business. So you cannot be saying a foreign company will be coming to do business in Nigeria and will be less than 25 million. No, it must be higher than 100 million. Special businesses are higher, their revenue is much higher than 100 million. So they fall on the 30%. Now let's look at an example. Let's look at an example here, illustration 9.1. The statement of comprehensive income of Kute Orion Airways. So how will you know this is a specialized business? First of all, you will see the word airways or shipping or telecommunication. Secondly, you will see where it is incorporated. These are the two things. It is incorporated in Ghana, in Germany, sorry, in 2015. Now, this is the activity for the year ended 31st December 2017. Then we are asked to do all of this. Then the federal inland revenue is satisfied. So another thing you should be checking out here is if they are satisfied, there must be a satisfaction. Sorry. There must be a satisfaction that the tax authority in Germany computes and assess the profit of the companies in a similar basis as Nigeria. So this satisfaction must be there. If it is not there, then you cannot use the adjusted profit or the depreciation ratio. Okay? So you are required to calculate the tax payable for the relevant year. Okay, so look at how we are going to solve it now. What's the name of the company again? Kukute Oriogun Airways. So this is advanced taxation. Topic: taxation of special businesses. So we are in airline shipping. Non-Nigerian businesses. Okay, it's non-Nigerian. And now this question is asking us, this is example 1. Example 1. Kukute Oriogun Airways. This is in Germany. So that's where it is based. Now, this is for the year ended December 31st, 2017. So preceding year basis is going to be 2018 year of assessment. So we are looking for tax liability for 2018 year of assessment. All right, so how do we do that? We will now do a 2 naira sign. Then we look at the incomes. Now we'll be dividing them into Nigerian income and non-Nigerian income for the sake of um, simplicity. So I will say these are Nigerian income. So let's divide them. So let's look for the Nigerian income. Now, income from passengers freight. Now, out of Nigeria is Nigerian income. So I will say out of Nigeria, how much is that? 300,000. I just want to believe that this is in millions. Let me just assume that this question is in millions. So this is free. Let's just assume let's leave it the way it is, but we know that they are going to be charged 30%. So this is 300,000. Let's check again if there is other Nigerian income. Income from passengers flight into Nigeria. Now this is not loaded in Nigeria. They came and their destination is in Nigeria. So this is into Nigeria. This is not a Nigerian income. And income from passengers freight on other routes. This one does not even have to do with Nigeria. So these two are not Nigerian income. So we do that here. This is Nigerian income, 300,000. This is non-Nigerian income. So how do we know non-Nigerian income? We'll say freight into Nigeria. So it was not loaded in Nigeria, but it came into Nigeria. This is 1 million. Freight to other routes. It should be 3,600,000. So this is 3,600,000. When you add this, that will give us 4,600,000. So Nigerian income is just 300. Other routes, other income is 4,600,000. So when you add them together, you have 4,900,000. So this is called global income. Okay, so this is your global income. The income, we call it also worldwide income. Either you call it worldwide income or you call it global income. They all serve the same thing. Now, the next thing now is to deduct allowable expenses because we are starting from the beginning. There is another way of doing it to start from the net profit. I'm going to do it the two ways. So we have our global income. The next thing is to deduct allowable expenses. So you have to deduct allowable expenses. So what are they? Administration expenses. Administration expenses once 1,620,000. Admin expenses 1,620,000. The next one is financial expenses 340. Financial expenses 340. We have depreciation. Of course, we will not take depreciation because it's not allowed. Then we have other disallowable expenses. We will not take that because they are not allowed. So these are the allowable expenses that you are deducting. Take note, if you are starting from the beginning where you have revenue down to global income, you use the deduct allowable expense approach. So this is going to give us 1,000,000 nine 1,960,960. So this is your, then when you look at this now, let's let's do this together. 4,900,000 minus 1,960,000. That gives me what? 2,940,000. 2,940,000. So this becomes your global adjusted profits. I said we can do this, we can get this in another way. So let's look at the alternative method you may want to use. Let's see this alternative method here. Alternative method, I call it net profit approach. Okay, so let's look at it. You start with the net profits. And the net profit given to us here, 2,172,000. So it's 2,172,000. That's our net profits. What do we do to the net profits? Now, in this case now, you are adding back, add back disallowed, disallowed expenses. You are adding back disallowed expenses. One of them is depreciation, 588. So this is depreciation. 588,000. Then we have other disallowable expenses, 180. Other disallowed expenses, we have it as 180. When we add them together, 8 plus 8, 16. 4, 5 plus 1, 6, 7. This is going to be 7, 6, 8,000. When you add this will give me my 000. 8 plus 2 is 10. 7 plus 7, 14. 8 plus 1, 9. 2,940,000. So let's see. We have the same figure, 2,940,000. So these are the two ways you can get your global. So this is your global adjusted, this adjusted profit. Okay, sorry, I had a network problem. So the next thing we are doing here is the computation of satisfactory ratio. Ratios. So the first one is called global adjusted profit ratio. It's called global adjusted profit ratio. Now to calculate that, so your GAPR is equal to your global adjusted profit, which is by global income. We will now say GAPR, your global adjusted profits is 2,940,000. Then the other one is 4,900,000. Two 940. All over 4,900. Okay, so this is saying 60% of your revenue is your profits on a worldwide scale. What does this imply? It means that every income that you made from all the world, all the countries in the world, 60% is taken as profit. That is what it means. Now we will now look for the global depreciation. I'll write it in full. Global depreciation, depreciation ratio, C G D R. So that was the second ratio we are looking at. So your GDR is simply your global depreciation all over global income. This is GI, this is GD. All right, so what is our global depreciation? We are told that our global depreciation is 588. So this is going to give us 588,000 all over 4,900,000. So what will that be? We'll now get our calculator. 588,000 divided by 4,900,000. That will give me 0.12. So your GDA is 0.12 or 12%. So profit is 60%, depreciation is 12%, profit is 50%, 60%, depreciation, or I would say capital allowance now, because your depreciation is given in lieu of capital allowance, is 12%. So what was the next thing to do? The next thing to do is to look for your Nigerian taxation. So you will now look for Nigerian tax liability. Now, meanwhile, all the while here, we have been looking for global figures. We started by getting Nigerian profits, Nigerian income. Then we got the worldwide income. Then we got worldwide profits. Our worldwide profit, which is adjusted profit. Then we now have gotten the adjusted profit ratio and the depreciation ratio. So now we are going to be applying them now. Nigerian tax liability. So you start with Nigerian income. We learned that Nigerian income was 300,000. We can verify. Let's verify what we did here. 300,000. Okay, now that we have Nigerian income as 300,000, we are told that in our global income, 60% of our global income is profit. That would mean that 60% of any country's income will be their profit. So what we now mean here is Nigerian adjusted or accessible profit is going to be global adjusted profit ratio multiplied by Nigerian income. So this is Nigerian income. So all you now need to do here is 60% times 300,000. That will give me 180. So that's your Nigerian accessible profit. The next thing to do is Nigerian capital allowance. Allowance is going to give us your global depreciation ratio multiplied by Nigerian income. So it means this is 0.12 multiplied by 300. That's 36,000. Let me be sure. 0.12 times 300,000. That's 36,000. So when you remove your depreciation from your income, okay, so 180,000 minus 36,000, that gives us 144. So 144, this is going to be Nigerian total profits. Then your Nigerian tax, it will be 30% of 144,000. So that will give us how much? So we are multiplying by 0.3. That will give us 43,200. So that's where we stop. Now note here that Nigerian tax will end at the CIT. We will never calculate education tax because these are non-Nigerian companies engaged in special business. So what have we done so far? We looked at the global income made worldwide. Then we tried to remove only the allowable expenses. So Nigeria will look at all the allowable expenses there and they will remove them and they will have something called global profit. After getting the global profit, they will now look for ratios, global ratios. The global adjusted profit ratio, which will be the global profit all over global income. Then the global depreciation ratio, which is going to be the global depreciation over the global income. Now, when we get these global ratios, we are now going to use it to calculate Nigerian specific details. So the Nigerian specific detail will start from the Nigerian income, which was 300. We will now use the global adjusted profit ratio to adjust Nigerian income to get Nigerian accessible adjusted income or Nigerian adjusted profit. So we will now say 0.6 times Nigerian income. We will now do the same for capital allowance by using the depreciation ratio to multiply Nigerian income. And when we get our total profit, we look for the tax, and that's where we end. All right. Now let's look at illustration 2. The statement of comprehensive income of foreign airline. So you can see here they wrote it foreign airline. You know it's special business. Eiffel Airways operating from France for the year ended 31st March 2017 as follows. Then we are given all of these information. Then we are told that the board of the Inland Revenue allow the company to claim the amount charged as depreciation in the account in lieu of capital allowances. Salaries and other expenses include deposit for new DC aircraft, payment of VIP lounge at International Airport Kaduna to Nigerian Port Authority, payment of 12,000 naira for rent of accommodation used as transit flat by the airline crew. Let me check something here. Let me see what's okay. There's something I was checking down here to see if it aligns with what I think. It didn't align with what I think, but I will go with what they have. You are required to prepare a statement showing the tax total profit for Nigerian tax purposes and the income tax payable by the airline for the relevant year of assessment. They say the tax rate is 30%. So let's look at illustration 2. So let's go to illustration 2. Illustration 2, and it is Eiffel Airways, France. Eiffel Airways, France. Computation of total profit and tax for year of assessment. What year of assessment? 2018. So we will start with Nigerian income. Let's check how to get Nigerian income. Income from passengers freight into Nigeria. Is this Nigerian income? No, it is into Nigeria. Income from goods loaded into aircraft in Nigeria. Yes, Nigerian income. Income from passengers freight out of Nigeria. Yes, Nigerian income. Income from goods into aircraft on other routes, not Nigerian income. So we will say Nigerian income is 440 and 360. That's it. Income from goods loaded into aircraft in Nigeria. Income from goods. How much is that? 440. Income from passengers. 360. Am I correct? Yes. When we add these together, 6 plus 4 is 10. 4 plus 4 is 8. So that gives us 800,000. We will need to remember that that is Nigerian income. Next should be non-Nigerian income. We have income from goods. Okay, passenger. So this is passengers. How much is that? 600. Income from other routes. We have it as 1 million. 1 million. We add them together, it gives us 1,600,000. Add it to this one, 2,400,000. So this is going to be our global income. 2,400,000, 2,400,000. Okay, so the next thing here is to remove allowable expense. So we'll say less global allowable expenses. We now have salaries and other expenses. So I will say they said salaries and other expenses. How much is it? 1,600,000. 1,600,000. Okay. Now, but not everything here is allowable. They said these salaries here include deposit for new VC aircraft. This is a capital expense is not allowable. So we remove this 160 from it. Now say less deposit for new DC aircraft, for DC aircraft 160. You check again. Payment for VIP lounge at the International Airport, Kaduna, to Nigerian Port Authorities. So that's okay. Payment of 12,000 of rent for accommodation used by the transit flats, used as transit flats by the airline crew is okay. So these two are okay. It's just this that is not okay. So when we remove this, we're left with 1,000,006. Okay, this is going to be 5 minus 1, 4. 10 minus 6, 4. Let's be sure we did the right thing. 1,600,000 minus 160, 1,440. So that's your allowable expense. If you look at the other ones here, depreciation is not allowed. Other disallowable expense, they are not allowed. So these are the allowable expense you are deducting. So you have to deduct this from 2,400,000. So you deduct it from 2,400,000, and you have 960. So 960 becomes your global adjusted profits. Now you've got your global adjusted profit. You will now do your ratios. Global adjusted profit ratio is going to give me 960 divided by 2.4. I think it's 2.4 global income, 2.4, 2,400,000 times 100%. So what would that give me? 960 divided by 2.4. If I times it by 100, it's going to give me 40%. So this is 40%. It means your profit is 40% of your revenue. Then we have global depreciation ratio. We have our depreciation here. It must be given 240. 240 divided by 2,400,000 times 100%. That will give us 10%. So your depreciation is 10%. Now the next thing is to calculate Nigerian tax. Nigerian taxable income and tax payable. Nigerian income, we calculated it then as 800,000. Nigerian accessible profit. You're not going to use your global income, your global accessible profit, adjusted profit, which is 0.4, sorry, 0.4 multiplied by 800,000. That's 320. Then you have Nigerian capital allowance. That's going to give me 0.1 multiplied by 800. That will give me 80,000. So 320 minus 80,000, that gives me 240. 240. This is Nigerian total profits. Nigerian tax liability going to give us 30% times 240. That is going to give us 96,000. Let me check. 72. Sorry, it's 72. So that will give us 72,000. So that's it. For that, that's it. Okay, so they did something different here. $80,000. What am I saying? Less capital allowance 240. What was the language used here? I need to see the language used here. The Federal Board of Internal Revenue has agreed that the company to claim the amount charged as depreciation in the account in lieu of capital allowance. Theirs is not correct because this is global depreciation. It cannot be, this total depreciation here cannot be used as capital allowance, the whole of capital allowance in Nigeria. So I don't agree with the answer here. They should have looked for 10%. They should have looked for 10% of the, should have done the depreciation ratio. So I don't agree with that. That's why we are having a different things. Now, it was said that from 1988 year of assessment, subsection 4 was added to section 12 to the effect that tax payable for any year shall not be less than 2% of the full sum received in respect of carriage of passengers, bills, livestock, and all that in Nigeria. So what they are telling you here is after calculating your Nigerian tax liability, you need to look for your minimum tax. minimum tax. Minimum tax is going to be 2% of Nigerian income, which is 0.02 multiplied by 800,000. That should be 16. 800,000 multiplied by 0.02, that should be 16. So what they are saying is that, assuming that your depreciation ratio is high, or is very low, and or maybe it's very high, and your total profit is low, um, yes, very low total profit, and your tax is very low, then we need to check your minimum tax. If your minimum tax is bigger than your tax liability, you will pay your minimum tax. If your minimum tax is smaller, then the minimum tax will be set aside and you pay the normal CIT. So that's what they are saying. CIT is now going to be compared with minimum with minimum tax. Okay, now that we've done airline, we'll for now skip the insurance. We'll come back to it. I'll tell you what you should note about it. We'll skip that. We also skip that of bank. I'm looking for um, telecommunication. Let me see if there's another example for telecommunication. So I'll have you note that the way that we treat airline is the same way we treat telecommunication. So they didn't give us any example here, but I will want to give you an example. Now let's say MTN Nigeria is a telecommunication company. MTN is not a Nigerian company, right? So that means its its transactions, worldwide transactions, we will need to evaluate it to get Nigerian income. But what about Glo? Glo is a Nigerian company, and Glo does not fall under special businesses. This is because all the income worldwide is in the hands of Nigeria. But look at MTN. MTN, all the income from MTN is not from Nigeria. Only those that were made in Nigeria is for Nigerians. Now let's look at two questions here. We have 2017 November, question 6, and 2018 November, question 6. 2017 November, question 6. Let's open it. 2017 November, question 6. And we'll still get to 2018 November, 2018 May, sorry, question 6. So let's look at each of them. So let's look at question number 6. All right. So we have Pategi and Abu are brothers based in Hackettstown in New York, Jersey, United States of America. So this not in Nigeria here. In 2009, the two brothers and 10 other African American incorporated a company, Pategi Telecommunications Limited. Now this is telecommunications, whose major line of business is telecommunication. The company has a representative office in Share, Kwara State, Nigeria. In the year ended 31st December 2014, the following transactions were extracted from the books of the account of the company. Okay, so these are number of minutes. Look at the number of minutes here. Look at the worldwide expenses and look at the average charge. Look at the average charge for messages applicable during the year under review is $0.5 per minute, and the applicable rate is 198 naira to $1. So look at what we are going to do here. This November 2017, question number 6. So I will say this is past question. I can past questions. November 2017, question 6. Okay, so this is Pategi Communications Limited. Pategi Communication Limited. Okay, we are looking for the tax liability for the year 2018 and 2015. So we are looking for the Nigerian tax liability for year of assessment 2015. So we will have to do something here. This is going to be in Naira. This is going to be dollars. This is going to be dollars. So what did they say here? Okay, let's do it this way. Let's do it this way. Then this is going to be minutes. Minutes. We'll now say Nigerian income. Let's look at Nigerian income here. US to other parts of the world. This is not Nigerian income. US to Nigeria, not. Nigeria to US, correct. Nigeria to Canada, correct. US to Canada through Nigeria, no. So it means that this and this, Nigeria to US, so let's say Nigeria to US, how much is that? 426, 426,250. 426,250. Then we have Nigeria to Canada, 550. So when we add them together, what do we have? We have here 426,250 plus 550,000. We have 97,250. What do we have? 976,250. 976,250. So this is total Nigeria income. So we are going to now multiply this by, what is the rate? What is the rate? 0.50 per minute in dollars, 0.50. So this is 0.50. So let's multiply this by 0.50. So you say multiply by 0.5. That will give us 488,125. 488,125. Okay. We are also told that the conversion is 198. So you will now come here and say multiplied by 198. We multiply by 198. So this is going to give you the Naira value, 96,648,750. 96,648,750. So this is Nigerian income. So we have the non-Nigerian income. Write that well. Non-Nigerian income. What would that be? I will just add everything together. So 1705. So I will just come here and say 1705 plus 374 plus 794 750. Add this up the minutes here. We have 1750 1750,000, 1705 1705,000, 374 plus 374 plus 794 750. Now that gives us 2873 750. 2873. Okay. If you want to know the total number of minutes, I may have to do it here. 976,250 plus 2873 750. That will give you 3850. So this is 3850. This is the total number of minutes. But this is for Nigerian non-Nigerian income. All you now need to do here is to multiply by 0.5 to get it to dollars. So you multiply this by 0.5 to get it to dollars. 1436,875. Then you still multiply by 198 to get it to Nigeria. To get it to Nigeria, multiply this by 198, and that will give me 284,501, 284,501, 284,501, 250. Now, if I were to add this to the up one here, plus 96, 648, 750, that will give me 381, 150. This is your global income. Another way of getting it here is by multiplying by 0.5 times 198. Let's see if we'll get the same thing. I have this here times 0.5 times 198. That's the same thing. So that's your global income. That's your global income. So what do we do now? We have our global income. So after getting the global income, I will state it down here. This is global income. So for the sake of making it good, you can write it down here. Nigerian income. Just bring it down here. 96,648,750. Non-Nigerian income. We have 381, 150. Sorry, made a mistake. Non-Nigerian income is 248, 284, 501, 250. Then your global income is 381, 150,000. So this becomes liter global income. Then we are giving expenses. Worldwide expenses includes the following: refurbishment. So we are going to be taking the allowable expenses. Refurbishment is not allowed. Rent is allowed. Salary and wages are allowed. Admin expenses are allowed. Refurbishment. What is refurbishment? We may leave the refurbishment. Let's leave that. Rent is 1.1 million. So we will have allowable expenses less allowable expenses. So we have rent 1.1 million. Then we have salaries and wages 4,065,188. Salaries. The next thing is okay, and wages. Administrative expenses 48,20,750. All right, so that's it. We now add all of these. We have 1 1 plus 4,065,188 plus 4,820,750. Now that gives us 9,985,3938. 9,985,938. Let me see if that's what we have. 9,985,938. So that's it. We are lessing it. And the answer we will get will be our. So let's less this now from our 381, 150. Thousand. That will give us 371,164,62. So this is going to give us our global in global adjusted profits. Let's see if we got it correct. Sorry, that's not it. 371,164,62. That's fine. Then this is our global adjusted profits. We shall now do our ratios. Ratios, global adjusted profit ratio. That is going to be our global income, 371,164,062 divided by 381,150. 381,150,000 times 100%. So what would that give me? So I'm going to divide this by 381,150,000. There's something blocking my calculator for me to see it. 97%. 97%. So that's 97%. Then you will calculate your global depreciation ratio, which is going to be also depreciation here, 25,911, sorry, 25,991,563. 25,991,563 divided by 381,150,000. So let's see, 25,991,563 divided by 381,150. That's going to give me 7%. All right, so now that we know our ratios, we will start with Nigerian income. Also, our Nigerian income, we need to bring it down. We did it here, 96, 648, 750. Then your Nigeria accessible profit going to give us 0.97, which is 97%, multiplied by 96, 648, 750. So let's see, 96, 648, 750 multiplied by 0.97. That will give me 93, 749, 288. So that's your accessible profit. Nigerian capital allowance. That's going to give me 7% multiplied by 96, 648, 750. 96, 648, 750 multiplied by 0.07. That will give me 6,765,413. 6,765,413. Okay, so you will now start 93, 749, 288 minus 6,765,413. That gives me 86,983,875. You get it in my head. 86, 983, 875. So this is your total profit. This is your Nigeria total profit. Nigeria tax CIT at 30% of total profit. This is going to be 0.3 times 86,983,875. for 30% of it. That will give you 26, 95, 163. So this is your CIT. You will still need to check minimum tax. Minimum tax at 2% of Nigerian income. So which is going to give me 0.02 times, what is Nigerian income again? 93, sorry, 96, 648, 750. So we look for the minimum tax, 96, 648, 750 multiplied by 0.02. That will give us 1,932,975. Did I get that figure right? Yes. So this is your minimum tax. This is smaller than the CIT. So the company will pay the CIT. Now that's the answer to this question. That's the answer to this question. So we have just done question 6, which is this. So you are going to do this for me. Taxation of special business airline in May 2018. Question number 6. Let's just look at what it says. We are not solving it. You are the one who will solve that and send back to me. Now this is aircraft, just the same way we did the other one. This is the aircraft. Almost the same thing. So almost the same thing. So you will get that for me. All right, so your ICANN exam, they will mainly test you for airline and shipping. They have not tested you for insurance company. Neither have they tested you for banking. So what I will advise you in this respect is to look and try to memorize the formula for each of them. There have been no examples in ICANN past question that was used for this. So if they are going to give you an ICANN exam question, don't be surprised. It may be exactly what is in the study pack. It may be exactly what is in the study pack. So you just have to memorize this format. You just have to memorize this format. and study the example given here. Study the example given here so that you can familiarize yourself with the insurance. We have the life assurance and the non-life. We also have the Nigerian life insurance, and we have non-life Nigeria and non-Nigeria. Then we have reinsurance business. All these ones are, you need to memorize the formula. I will not talk about that now because that will take a very long time. All you need to do is to remember the formula. If you can't remember the formula, don't bother your head around that. Mostly when they are giving exams for special businesses, they will focus on airline and shipping, which we have taken pace now to solve about 2, 3 questions. So see how you can remember that. That is where your exam will come for that topic. That is where it is going to come. So it has been a lovely day here with you in the class. You see special businesses. These are businesses that are into airline and shipping, and they are non-Nigerian. We saw how we calculated the worldwide income, how we separated Nigerian income from non-Nigerian income. Then we saw how we calculated our global income, which is the addition of the Nigerian income and the non-Nigerian income. Then we see how we got our global adjusted profits when we removed the allowable expenses from the Nigerian income. Then we got our ratios, global adjusted profit ratio and the global depreciation ratios. And how we now applied these ratios to get our accessible profit and our capital allowance. When we less the accessible profit, we take the less the capital allowance from accessible profit, we got our total profit. And it is from that total profit we calculated the tax. Then after calculating the tax, we calculated our minimum tax. And that's it. That's it. The treatment of airline and telecommunication are very, very similar. Whereas the treatment of insurance, we have to be life and non-life, and there is reinsurance. You may need to look that up and see if you can memorize it, but if you can't, don't disturb your brain that much. So it's been a good time in class today. Thank you so much. If you have any question, please feel free to ask me in the WhatsApp or in my email. I will see you in the next class. Thank you once again.